Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing Jean Martineau, the CEO of Dynacor Group, which trades on the TSX under the symbol DNG. We initiated coverage on Dynacor about 1 year ago with a buy rating and a $6.50 target price, which was later increased to $7.50 as the company executed and the gold price has risen in that time. Jean, thank you for being here today.
Thank you, Ben. Looking forward to it.
Yeah, me as well. And this is the first time we've had you on the channel, so this will be a good introductory call for the viewers. So to kick it off, for those that haven't seen the Dynacor story, maybe you can run us through the presentation here, and then we'll get into some Q&A after that.
Perfect. Thank you very much, Ben, for this opportunity to present the company. So let's go with it. First, forward-looking statement. And here, Dynacor Group is an industrial ore processing company that produces gold sourced from artisanal miners only. We're not a mining company. We buy ore from artisanal miners. So we established that in 1996, and we've been operating a mill in Peru since 1998. So actually, we have been doing that for 28 years. In Peru now, we have more than 550 employees. Net sales for last year were $284 million. We generated more than $29 million in EBITDA, $21 million in cash flow, profit of 45 cents US per share. And last year we have processed this way 117,000 ounces of gold. And the sales for the last 5 years have been increased by 23% in average per year. Dynacor is a unique know-how acquired over the 25 years and several gold cycles. Our secret sauce comes from deep know-how in purchasing the ore, pricing it, and processing it. And we buy ore from over 750 different clients. So you can see on the maps, we have purchasing offices through the country, from north to south. So we covered all the countries to buy ore from artisanal miners. As I said, Dynacor is a leading industrial company dedicated to gold with a proven, consistently profitable business model. We are leading processor of gold from artisanal miners. We are today the largest publicly traded processor of artisanal gold globally. And this market of gold produced by artisanal miners represent today in the world almost 25% of the total gold production in the world. So it's an expanding market almost by 1% per year. We have a very good financial profile. We are generating profit over the last 14 years. We're a debt-free company, and we have a 23% sales increase over the last 5 years, consistently over this last 5 years. We have a well-defined growth strategy. We have an organic growth strategy focused on capacity expansion, porting unique business model to other countries, focusing in Latin America countries and in Africa. And we're targeting 500,000 ounces of gold to be produced by 2030. A very good track record returning value to shareholders. We have consistently increased the dividend policy with 6 increases since 2018. And we have an active share buyback program. And we have produced ESG report for the last 4 years, so we have focused on this. It's a very important aspect too for us. So Dynacor today, Dynacor unique business model provides a competitive advantage. Dynacor's decades of expertise in purchasing, pricing, and profitable processing of artisanal gold represent a powerful competitive advantage and sizable barriers to entry. There is three very important point in this business: the procurement. You have to know what kind of ore you can buy and what kind of ore you cannot buy, because we cannot process any kind of ore. So you have to know that. And you have to know at what condition you can buy this ore. at what price, because all ores are different from one to another one. And after that, you have to know how to mix that. It's very important for this. And we have maintained over the years a deep relationship with key stakeholders across the ESM system. So we have been in production for almost 30 years. We achieved our production guidance for the last 3 years, consecutive years, and we have accumulated over these years a unique know-how, resulting in increasing efficiency of our operation and a higher and consistent yield of refined gold production. Our gold doré is transported and sent to a Swiss industrial market, where it's refined and sold to premium watch, aerospace, and healthcare industries. And our business model provides a natural edge on the gold price, because we buy ore from artisanal miners at the price of today, and we export the gold like 15 days later on. Here you have an image of our production process. We buy ore from an artisanal miners. So the artisanal miners come to the mill. We weight his truckload, we discharge that, we crush it, and we sample that, always followed by the artisanal miners. And in the lab, we give him a sample of that, and he can go in another lab to have it analyzed and compare with our analysis. And we have the results in 24 hours, and we pay him right away. So after that, we just process the ore through our mill, and we export it to Switzerland in average of 15 days to do all this process. If we look at that for the last 10 years, we have a strong growth driven by processing capacity expansion. So for the last 10 years, gold production have increased by 6% per year in average. If you look at the sales, it has been increased by 15% in average per year. And we look at the EBITDA, same thing, it's 15% in average per year, cash flow 16%, and fully diluted earning per share have increased by 21%. So it's pretty good track record. Mm-hmm. We have a 5-year strategic plan. Our strategic plan is to open new processing plants in other jurisdictions. I mean, in South America, mainly Peru and Ecuador, and in Africa, where we will begin to build a pilot plant in Senegal this year, and we want to build other pilot plant in Ghana, in Ivory Coast, in the coming years. So we target these 3 countries in Africa, plus 2 countries in Latin America. So our yearly production, we want to reach 500,000 ounces of gold in 2030, and for this year we need to build at least 4 new mills. We've been doing that for more than 25 years of experience. We have a very expert team in this, and ability to process different types of ore to maintain high recovery rate and steady head grade, which is not very simple, because we have to process these ore, to know how to mix these ore together to have a very high recovery rate. So it's a know-how that we built over the years. If we look at the market summary, yesterday the market closed at $5.06. We have actually 42.2 million shares, approximately about $215 million in market cap, no debt, and 1 year price return 44% in 5 years, and a monthly dividend of 1.3 cents. It means 16 cents per share. We began this dividend pay in 2018, and we have increased that by 2 cents per share every year since then. So if you look at the stock progression over the 15 years, the gold price have increased in that time for an average of 6% per year, and Dynacor have been increasing up to 24% per year if we took the price at the end of 2024. So it's quite an interesting increase. Dividend and share buybacks, as I said, we paid actually in 2025 16 cents per share, the sixth dividend increase since October 2018. And share buyback program, we bought last year about 1.2 million shares in the market. We have developed a very close relationship with our buyer in Peru, the company Presinox, which is a private refinery. And with them, we have created a program called PIX Impact, where some clients of this refinery are ready to pay a premium over the gold price because we guarantee the traceability of this gold. So all this money is sent to an NGO we have created in Peru called FIDAMAR. And this money doesn't go in the pocket of the artisanal miners, but it goes in the villages of these miners, invested mainly in health and education. And in last year, we have invested this way $750,000. And in 2025, we're going to invest $1 million. So we have a strong support from our clients for this kind of project. And it's very, very well received by the community of these miners in the country. We are dedicated to environmental compliance, to as evidenced by our environmental management plan, which is based on the highest standards of environmental governance and adherence to Peruvian mining law. So our CSR program and voluntary disclosure speak to our commitment to social responsibility. We have published up to today 4 GRI compliant ESG reports since 2020. So it's another very important aspect for us. And with this, last year we obtained the certification for the management of cyanide in our operation. So it's mainly it's what we're doing there in Peru. We've been there for 28 years. We are the main gold ore processor from artisanal miners in the country. We are one of the 10 biggest gold exporters in Peru, actually. And what is very important here is this gold production in the world today is more than 24% of the total gold. And in Peru, it's said that actually 2/3 of the gold produced in the country comes from the artisanal miner sector. And in Africa, it's even more important. Last year, we have produced in our mill 4 tons of gold, a little bit more than 4 tons of gold. In Senegal, the artisanal miner sector produced per year about 8 tons per year. If we look at Ivory Coast, it's about 45 tons per year, coming only from artisanal miner sector. And when we look at Ghana, which is today the biggest gold producer in Africa, 65 tons per year comes from the artisanal miner sector. And this, in these countries, there is no milling processing plant as we have in Peru. And so we intend to develop these in all these countries, this business model. We have been in contact with these authorities, government in all of these countries, and it's very well received. And all these countries, they want us to build something there to try to help them formalize this sector. Because when an artisanal miner process ore by himself, if he process ore as we saw in Africa with our gravimetric method, is going to recover 25% of the gold in the ore. In Peru, they use a lot of mercury, and with this, they may recover 50% of the gold. But it's just 50% of the gold, plus the cost associated to buy mercury on the black market, and after that, they have to sell that on the black market too with a 20% discount. So in our case, we buy the ore fresh from the artisanal miners. So doing that, he can earn up to 3 times more than what he can earn processing that himself. So once we begin with an artisanal miner, he doesn't want to return to process it himself. And with this, well established, the government has a control on the production in the country, on the export, receives taxes, so the miners can earn up to 3 times what he's earning doing that illegally. The company, the processor is doing his business, employing people, paying his taxes, and the government has control on the production in the country, on the export. So it's a win-win-win situation this way. So we've been doing that for 28 years. We know exactly how it works. We have developed this know-how very well. As I said, there is three very important points for this. You have to know what kind of ore you can buy. You have to know at what condition you can buy it. And after that, how to mix it, because you cannot mix all kind of ore together. Your recovery rate will be much lower than what you can achieve if you select how to mix that. So we have over the years a recovery rate of between 92 and 94%. Which is very good, because at the beginning we had very variable recovery rate. So today we control that very well, and with this know-how, we're ready to expand in other countries. So that's why we want to build another mill in Latin America, or in Peru, or in Ecuador. We're looking at that actually. And this year we're gonna build a pilot plant in Senegal. The objective of the pilot plant is to define all the condition, the economics around that, how is going to be the logistic, how we can deal with artisanal miners, what is the potential, the average grade, and when it's done, we're going to build a commercial mill of 300 tons per day. So we expect to have this pilot plant ready by the end of this year, beginning to operate that at the beginning of 2026, and after some months we're going to have all the data we need. So we're going to go ahead with a commercial plan in Senegal, and we want to duplicate that the same in Ivory Coast and Ghana. So it means that by 2028, 2029, we target to have 3 mills, one on each of these countries, and another one in South America. So at that time, we may have 5 different mills operating, and our objective is with this to process 500,000 ounces of gold.
So getting into some questions, again, I appreciate you running us and the viewers through the presentation there, as well as going over a bit more detail about the growth plans, which we'll get into a few other questions on that. But having just reported your Q4 and full year 2024 financials this week, maybe you could walk us through how 2024 went, and then what we can expect in 2025. I know you also recently reported the 2025 guidance.
Yeah. Well, in 2024, we have been over our target. You know, we have targeted we have produced 117,000 ounces of gold, and the year before we produced 129,000 ounces of gold. And why this thing is because the gold price went up substantially, and the artisanal miners, they operate just like big companies. If the gold price is higher, they can earn the same money or even more with a lower grade. So higher is the gold price, lower will be the average grade. So in fact, when you look at our financial for last year, we had processed 12,000 ounces of gold less than in 2023, but we went with total sales from $251 million to $284 million. And it's the same for profit, it's the same for EBITDA, it's the same for cash flow. So it has been a very good year. And this is because the gold price increased substantially. And so the production of gold itself was lower, but because of the gold price, we have generated better profit. And it's exactly what are doing the artisanal miners. They can produce ore with a lower grade and earning more money. So mainly it's what happened in last year. Many shareholders are asking us for that, but it's what we have to understand. You can earn the same amount of money with lower grade if the price is higher. So it's exactly what happened last year.
Okay, yeah, I understand that, and that certainly makes sense. So then how would that affect how you guys source your gold going forward with, you know, the gold price being over $3,000 an ounce right now? Are you modifying the way and the contracts, or does everything sort of stay status quo?
No, for the artisanal miners, it's quite a status quo. For the last, we have been increasing the milling capacity almost every year. This year, we won't increase the milling capacity itself, but we're going to invest in the mill to increase the efficiency of the mill, lower the cost, less chemical use, lower general cost, increase the recovery rate, increase the efficiency. So it's where we're gonna increase our revenue and profit this year. And with a new mill in Senegal next year. So from next year, 2026, and after that, we plan to increase milling capacity every year.
Yeah.
So that's the way it's going to be in the future.
And so that, I guess, is what brings me to the growth plan. So in terms of Senegal, you did speak a little bit about the timing. Maybe you can just remind readers in terms of how this works as we progress to 2030. But Senegal, the pilot plant will be in place by early 2026.
Yeah.
And then how long do you need to see that progress and that work and execute before you're able to build the full-size plant?
Well, our plan actually, our target is to have this pilot plan ready by the end of this year. So we can start it in the first quarter of 2026. It's going to be a pilot plant, 50 ton per day, so we won't increase much the production with this one, but it's to establish new parameters there, how to operate in Africa, because in Africa, the artisanal miners, they work differently than in South America. But there is a huge potential there. So from there, we plan to begin to build 300 ton per day mill in each of these three countries. Which one will be the first? We're going to see next year. This year, what we want to do is build this pilot plant in Senegal and prepare to be ready to build in the two other countries. It means look at property, do an environmental impact study, and go for a construction permit. So the first place we're going to be ready, we're going to go there. But in the following years, every year we want to build a new mill there. So the next mill could be the next commercial mill could be in Senegal or in Ivory Coast or in Ghana. And every year we will want to duplicate that in the following country. So it means that in 2028, we should have 3 mills operating in Africa. And at the same time, we're looking to build something or buy something in Latin America. Mm-hmm. So it's a pretty aggressive objective, but I think it's very achievable. With the team we have, actually, we have a strong financial situation and know-how very well established. So we feel very comfortable with that. It's aggressive. We're gonna have to go fast, but we're building the team actually in Canada with people with a very long experience in Africa, for example. So we're comfortable with this. So from, I would say, 2027, every year we should have a new mill at 300 ton per day.
Great. Yeah, that'll certainly boost the production and economics and so on.
Yeah, and in the meantime, we're looking in Latin America where, in Africa, you don't have any mill like us. We're going to build that from scratch. But in Latin America, in these two countries, Peru and Ecuador, you have quite many mills. So we're still looking at possibility to acquire something maybe. So I don't have a precise date on it, but as soon as we can find something suitable, we will just have to adapt that and start it. So I don't say that we're going to have an operation there in 2026 or 2027, but we're working on this. So we're going to add new production in 2027, 28, 29 in Africa. But in the meantime, we hope to have something much earlier than that in South America.
Mm-hmm. Okay, understood. And then just on the African countries that you sort of selected, what was the reason for Senegal, Cote d'Ivoire, and Ghana? And I think you might have touched on it just on how much artisanal mining is present in those countries. But maybe you can talk through why those three specific countries.
Well, Senegal first, it's a country with which in Quebec we had a long relationship. We have a lot of Senegalese working living in Montreal, for example. Some government institution has been present in Senegal. It's a very stable country. It has been a democracy since the independence from France in 1959 or 60. Very, very stable. We're very secure. Potential of gold is much lower than the other countries, but it's a very accessible place, very secure. It's a good place to to start with a pilot plan and prove that. Okay, Ivory Coast, it's because of the potential. It's a stable country too, politically stable. The economy have been increasing by a very good percentage over the last 12, 14 years, and very high potential. Speaking French too. And Ghana today is the first gold producer in Africa, another very stable country, secure. So that's why these three countries, Ghana and Ivory Coast, is because it's very high potential and stable countries. So we have to look when we go in these countries. It's possible to operate with legal artisanal miners, because in some countries there is absolutely no rules surrounding that, and so it means that you don't have any legal artisanal miners, so we cannot buy from these guys. In these countries it's possible, and we are working with this government to help develop more this sector of formalized artisanal miners or legal artisanal miners, for example. So we're working today with closely with the LBMA, World Gold Council, World Bank, to try to establish different forms to formalize these artisanal miners in different countries. But mainly, it's the main reason in these countries it's already accessible, very high potential, and secure countries.
Mm-hmm. Yeah, no, that makes sense. And like you said, it's a win-win-win. Dynacor, the communities, as well as the government, and then even the artisanal miners, of course. And then, so my last question I had, in terms of what investors can look forward to over the next year, what are some catalysts that they can look towards, obviously, the 4 quarterly updates, but what else can investors look forward to?
Well, as I said, we're looking for something in Latin America. We hope that we can have something this year, so that would be a very good catalyst. Mm-hmm. And beside that, we own an exploration property called Tumipampa for quite a long time. We did a lot of exploration on that, and we stopped that in 2016 for different problems with the communities there. It has been quite difficult, and many companies in these communities in the Andes there. But we have returned there recently. We have established a newly pretty good relationship with the community, and we're working with them. And if we can have a good deal with them, we're gonna apply again for exploration permit. Sorry, and to start the drilling campaign we have designed in 2018-19 to explore what we have found there. It's a disseminated ore body on the surface. So it's still exploration. It won't be a lot of money because the first drilling campaign was designed for $1.5 million, and to see what it is there, because we have established we have discovered an ore body of with a potential of 120 million tons there. And we have found gold grade on the surface of up to 2 grams. So if this ore body is mineralized of, let's say, 1 gram per ton, that would be a huge mine. But as it is exploration stage, actually, if it's 0.1 or 0.2 grams, it would be nothing. So I don't say we have a mine there. But it's a very interesting exploration program, and it could be fast. If we can drill that next year, we should know if there is an economic grade there. So that could be a very interesting thing, but it's exploration there. So
understood, and that actually brings me back to one last question I had. In terms of funding the expansion into Africa, possibly acquiring a project in Latin America somewhere, or a mill, what is the plan to fund these expansions? Obviously through cash flow, but what kind of costs are we looking at for these pilot plants and even the full plants? And then how do you expect to fund those?
Well, for this year, for example, we plan to spend in Senegal for something between $7-8 million, for example. A pilot plant is not a big stuff, but at the same time, we're gonna build something to prepare the future expansion there. To build today a brand new mill of 300 ton per day would cost at the actual price probably around $23 to $25 million. And to operate a mill of 300 ton per day, we need a cash flow of about $8 to $10 million, because we have to pay the miners right away when he comes. When he comes to the mill, we analyze that, and 24 hours we have the result, and you want to be paid right away. So it means that it's an investment of around $33 million for each new plant. So that's why we did this financing recently. We did a financing of 30 million Canadian dollars. We have at the end of the year $26 million in the bank account just to operate our mill in Peru of 500 ton per day. We need at least $15 million in cash flow because it's 500 ton per day, and over that we need $4 or $5 million as a buffer for any things. So it means that we needed to finance that. But even with the new plan, for example, it's going to be financed in large part with the cash flow we generate. Now we have a very good financial situation where we can build or buy a new plant and operate that, and we continue to generate a very good cash flow every year. So it's going to be financed mainly with this. And along the way, if we need more financing, we'll look at different aspects, as we did now with equity. But with this situation, new mills operating, a good cash flow generated, we're going to have access to maybe bank loans and different ways to finance, which won't be dilutive to the shareholders and not too costly either. Because at the beginning, it's difficult to have just a loan in Africa, for example, when you have never been there. So now we have a very strong financial situation and ready to expand.
Great. Yeah, no, that certainly makes sense, and you know, the capital raise that you just did definitely accelerates your ability to execute on these growth plans. And you know, when you look back in 5 years and you're producing 500,000 plus ounces, I think investors will be quite pleased that you accelerated that timeline. So, with that, Jean, thank you for walking us through the presentation as well as answering some of those questions. Definitely looking forward to seeing you execute throughout 2025 and beyond. Certainly an exciting new chapter for Dynacor as you expand into different countries, both in Africa as well as down in Latin America. And for our viewers, if you haven't seen our research on Dynacor, you can find it all at atriumresearch.ca. You can subscribe to our mailing list or find us on different social media platforms. And with that, Jean, thanks for your time today.
Well, Ben, thank you very much. It has been a pleasure, and see you later on. And if any people have a question, they are always welcome to send an email, to call us, and we'll be pleased to answer any kind of question.
Absolutely.
Thank you very much.
Okay, thanks, John.
Have a good day. Bye-bye.